What is happening, everyone? Hope you're having a fantastic day. Just wanted to hop on here real quick and give you some tips and some tricks on how you can save some money in a couple different areas that maybe you're not thinking about, that was brought to my attention over helping obviously clients in the past. And I thought this would be helpful, and I thought it would be something that I could share with you that maybe would save you some money if you currently are in a home or in a mortgage and not necessarily even refinancing. We're not even going to talk about that. Again, I recommend you talk with an advisor to determine if a refinance would be valuable or not. Cash out situation. Obviously, there's home equity line options as well. We've talked about that in previous videos, but we're not going to talk about that today. What we're going to talk about are three different things. And the first thing we're going to talk about is homeowners insurance. So a lot of folks don't understand that just because you committed to a homeowners insurance company when you closed on your home purchase, that payment of that homeowners insurance is paid for in advance for a year and then escrowed, that you don't have the ability or the permission to actually swap out homeowners insurance companies. And you have that right as a consumer. And I'll give you a story that happened to me where I had a client that I actually did a refinance for. And I asked her, I said, when's the last time you had your homeowners insurance reassessed? And she said, I haven't. I literally have been with the same homeowners insurance company. I noticed that my payments over the years have gone up. Didn't think anything about it. I knew it was probably my taxes and my homeowners insurance, but really didn't think that I had an option in order to swap that out. So guys, homeowners insurance goes up for whatever reasons. Obviously, homeowners insurance goes up maybe collectively because we're in a high inflationary period right now in the economy, and premiums just go up, or maybe you haven't had any claims and it just goes up. I remember myself personally, I had homeowners insurance, got in, it was very cheap. The next year it went up, I had no claims. And I was like, why is my homeowner's insurance going up? So I began to shop around, found another company that was cheaper. They were cheaper for a year, and then they went up. Had no claims against my home, but just naturally the premium went up. So then again, shopped around some more, was able to get it cheaper. So I encourage you to always make sure that you have the highest coverage with the lowest price, and it's okay to shop around, and it's okay to swap out those homeowners insurance companies, even in the midst of your mortgage that's being escrowed. Typically that homeowners insurance company will do all the heavy lifting for you and reach out to your mortgage company and get that all switched out and changed to make sure that that's a smooth transition for you. But never feel like you're locked in, because that can save you a ton of money. Because going back to the story that I mentioned you, this young lady had not done that. And so I told her, I encouraged her to shop around. She did, and she was able to save quite a bit of money. And we realized, had she done that 7 years earlier, because she'd been in her mortgage for 8 years and hadn't made any changes, she would have saved thousands of dollars over the last handful of years. And ideally, every dollar matters, right? Every dollar, there's no reason to throw money away, literally throw it in the trash. Because you're paying for something that you could get the same coverage somewhere else cheaper. So it's always good to get a second and a third opinion, to look at that. Your homeowner's insurance is one way that you can save money on a monthly basis, just by switching out and going with a company that will provide the same coverage, maybe even more coverage for cheaper money. So I always encourage you to look at that at least annually. And you can obviously talk to an insurance agent on that and figure out what your options are. But I encourage you to do that. Don't feel like you're trapped or stuck with that. The second thing we're going to talk about is mortgage insurance, PMI. Right? PMI is something that gets put onto the loan if you don't put 20% down. A lot of folks come into a home situation where they don't have 20% to put down, so they have to pay mortgage insurance. And we're only going to be talking about conventional. Now, the Govy loans are a different animal, because a lot of those, that's on for the life of the loan. So the only way to get that mortgage insurance removed is to actually do a refinance. But if you are in a conventional mortgage right now, where you put 5% down, maybe 10% down, and you have mortgage insurance on your loan, you can have that reassessed and to see if you have that 20% equity in the property in order for that mortgage insurance to no longer be on the loan. And you can do that without refinancing. You can actually reach out to your lender and they will do a reassessment. There typically is a fee associated with that, but they will go through the process, determine if that value is there. If it's there, then that will be a part of your payment that will come off. And if it's $50, $100, $200, whatever you're paying in PMI each month, that could be a tremendous amount of savings. And again, maybe something that just got overlooked because again, out of sight, out of mind. We just make the payment and we go on with our lives and we don't realize these little tips and tricks that will help us save money. And then the last thing I want to talk about is something called recasting. A lot of people don't know what this is, but recasting is when you can reach out. Let's say, for example, you came into some inherited money of $20 or $30 or $50,000. Now, again, granted, you need to talk to a financial advisor to find out what your best use of that money would be. I am not a financial advisor in that regards, but I would recommend you talk to anybody anytime you get a lump sum like that. But let's say, for example, that your best bet would be to put some of that money towards your current home. Well, you can do that. The lender, most lenders, not all lenders, but most, you'll have to call your lender to see if they will allow this. Recasting, where you can put that $30,000 or $50,000 onto your current loan. Let's say you owe $200,000, then put that $50,000 towards it. You now have a net balance of $150,000. If you don't recast it, your payment will not change. It'll be the same based on the $200,000 loan that you started with. But if you recast it, the mortgage company will stretch that $150,000 out, that new balance, down to that 30 years, and that payment will be reflected. And so your payment will be cheaper. And where this recasting comes into play a lot of times is if, say, folks are trying to buy a new house without selling their current house because they don't want to do a contingency sale in a tight market. So a lot of times they're going to buy the house they want to buy, and then they're going to list their house, or maybe list it while they're doing it, but it just doesn't sell so that they have the proceeds to put onto their new property. You don't have anything to worry about. Typically, most lenders will do a recast, and you can take that money once it closes. You've already closed on your first home, and the home that you're presently selling is now sold and you got the proceeds. You can actually apply that to. Typically, there are some rules, maybe 30, 60, 90 days, and there is a fee associated with that. So you're going to want to get with your current, the lender on your new property to see what that would be, but they will allow you to put that lump sum on there and then recast that mortgage to lower your payment. So a way for you to save some money there. Again, I encourage you and recommend that you talk to a financial advisor to see if that's the best use of that $30,000 or $50,000. But just to know that that is an option. A lot of people didn't even know recasting was even a thing, thought that you'd have to refinance and then apply it and do all of that, but you do not have to do any of that. You can literally take the current contract you have with that lender, add the lump sum to it, they will recast it for a fee and give you the ability to lower that payment. So I hope that's been helpful to you. To recap, we want to talk about how we can get your homeowner's insurance reduced. So think about that. If you haven't done that in a while, get that reassessed. Secondly, if you are in a conventional mortgage and you have PMI, you want to make sure that to double check and see if your lender, if you truly believe, let's say you put work into your home and the equity has climbed because you've made improvements to the property as well as an appreciating market. Maybe you're at a 20% loan to value position of equity, and you can have that reassessed without refinancing. And then the third is recasting, and that would apply only if it made sense to you take those lump sum to apply it to the new mortgage so that you could reduce the monthly payment. Hope that's been helpful to you. Until next time, bye for now.